everyone. Welcome to yet another Center Stage interview powered by Boardshire, an initiative of RightSource Global. Center Stage interview is a podium for global leaders to exchange ideas, thoughts, experiences, and more. Today we have with us Mr. Shashwata Banerjee, who brings in tons of experience in leadership and management for over 30 years. A global leader with experience over multiple sectors, specifically governance framework, financial services, risk management, and compliance. Shashwat, welcome on board. Before we dig in, it'll be great if you could give a brief introduction of yourself to our audiences.
Probably try to give a bird's eye view of my career. Started in 1987, and then I joined this group, General Electric, in their works in Calcutta. Worked with them for about 3 years. Moved to Bombay with a German pharmaceutical company, which was then known as Hext, now known as Sanofi Aventis. Worked with them for about 5 years across India, and then moved to the IT sector in Bangalore in the mid-90s with a company, Indian company called Microland. They were pioneers in the LAN and WAN working space. Worked with them again for about 3 years. And then the last 20 years of my professional service career, I spent with this French insurance group called AXA, in various roles. I started off as a CFO, then became the CEO of their BPO entity, then moved on to core insurance with them in a more governance framework setup, and so on and so forth. And finally, in the last few years, especially post-corona, I've set up my own independent consulting practice, focusing on financial services, risk management, and compliance, as also mergers and acquisitions and allied areas. So that's a brief background of myself.
With your experience specifically on board management and strategic planning, what practices do you think are essential for translating high-level business strategy into actionable plans across multiple functions?
So, well, if there are various angles to this question, and let me try to answer this from a board of directors perspective. The first and foremost thing that the board must understand or be aligned with is the vision of the company and also of the management. Okay, I have come across several cases in the past where the two visions did not align. And it's very, very essential that the vision that the board has and which it really defines for the company actually gets percolated to the management level. And very clearly, the management are then adequately equipped to deliver on that vision and mission. So that's for me a sine qua non, the alignment of vision and approaches of the board as well as the management. In terms of deliverables, okay, I would prefer that the board sets the overall performance parameters of the management and then gives them complete free hand to deliver the way they deem appropriate, of course, holding them to the final results. Okay, and there has to be periodical reviews at basically what we call as toll gates, especially for important projects from time to time, so that progresses can be reviewed and necessary corrective actions taken before the matter goes out of hand. I think from a very generic perspective, if we have alignment of vision and if we have alignment of approaches between the board and the management, the strategic planning activity and the execution of the strategic plans that have been so designed will be a smooth sailing rather than encountering obstacles in its path at various stages.
Alignment of vision, collaboration between board and management it is. What are your thoughts in applying artificial intelligence, particularly Gen AI, specifically to finance function, given that you have vast experience in this domain?
Is more of a recent phenomenon, and it's quite different from machine learning that has been previously deployed. Gen AI actually uses large models that analyze massive sets of data. And they get answers in a manner which is somewhat similar to how human intelligence works. So in these large language models, the medium of communication is natural language. So the logic is that the model has been calibrated, and then the information from this model is used to generate the output. So that's the background of Gen AI. And now Gen AI, over the past several years, and especially after the pandemic, has been increasingly used by financial services entities. And while it has massive advantages, there are certain challenges that it has posed as these companies have traversed down that path. Now, there are several such challenges, but I would try to sort of summarize them in two, three broad categories. The first thing is that this Gen AI is still a black box. So, what do I mean by a black box? Basically, even today, in spite of all the progress, the users of these models still do not know how these models operate. Okay, so there is a significant degree of unpredictability, a lack of explainability, and understanding the impact of these models is still a work in progress. Okay, so Gen AI is not a finished product as yet. It still has some distance to go. Second is the malicious use of AI. Now, these models basically work based on the data that has been fed in these models. Now, there can broadly be two categories of data: a good data, and then there is the bad data. Now, bad data is what is known as the malicious data. Bad data is data that is influenced or biased. And if I recollect, I think it was the year 2023, I think, where when Wharton or one of those business schools in the US, they did a survey in the US market, especially for U.S. mortgages. And these are, from an Indian context, home loan applications by individuals with banks and financial institutions. And they found that for a typical mortgage application, if you are a Black American, a middle class Black American, the chances of your getting it rejected is much higher than if you are white. And that's because of the racial bias in the data that has been fed in the system. Okay, so this is another big challenge, which is the malicious use of AI. And the third critical component of this challenge area is the cyber vulnerability. Now, we all know that cybersecurity is perhaps the biggest risk that is facing the financial services sector globally. And most of these companies deploy tons of resources to really safeguard against these cyber attacks, because literally the credibility of the company, the faith and trust of its customers and the operations depend on how successfully they are able to avoid or prevent these cyber attacks. Now, Gen AI is actually a tool that can work wonders in terms of defense mechanisms. But Gen AI is also a tool that can be completely misused to launch crippling attacks on these organizations that can effectively bring these organizations down. So it works both ways. Okay, so in a nutshell, I would say that the regulators, they need to increase their outreach to these various financial services organizations and effectively find out where they are using Gen AI. What are they exploring? What are the challenges and risks? And in turn, the regulators then need to upskill their technologies to address these technological challenges. They need to coordinate very closely with regulators across other geographies and internally within their geographies with associated regulators, so that all loopholes can be plugged from exploitation by unscrupulous players.
That's a comprehensive view of Gen AI and what it can bring onto the table. Moving on, you building up teams from scratch in India, what's your opinion of future of global capability centers in India?
These GCCs today, their future is as bright as it was in the 90s when they first came to India. And let me explain why I'm saying this. In the 90s, when I joined one such organization, we used to say at that point of time that companies, foreign companies, will come to India for costs and stay for quality. Now, these two parameters are still very relevant even after 30 years down the line. As long as the Indian rupee keeps depreciating against the major currencies of the world, India will be a very, very attractive place to do such businesses, the ones where GCCs are engaged for obvious reasons. Okay. But cost is not the only one driving factor. Quality is the other one that will sustain this business. Now, I don't think, and I say this responsibly, I don't think any country in the world can provide such skilled resources on a sustainable basis as India can today. Let me rephrase myself. I don't think any country in the world can provide such skilled English-speaking resources that India provides today on a sustainable basis. Mind you, the emphasis on English speaking. If China spoke English, was proficient in English in the 90s, the entire offshoring industry would have gone there and not come to India. But China lost out primarily because of its lack of English skills. Now, as long as in India, we have the focus on the STEM form of education, which is science, technology, engineering, mathematics, and backed by decent English speaking skills. This part of the industry, the offshoring part, the GCCs, they will continue to flourish. These are the two main reasons, but there are other reasons as well. Digital transformation. I remember 2007, Lehman collapsed. The entire financial services sector in the West took a massive beating. But the industry in India, from that point onwards, they started digitizing. They started capturing knowledge digitally. They went into data analytics. Last few years, they have been to AI and machine learning. That's a massive advantage. Okay. Today, the GCCs in India have actually transformed themselves into high-end innovation hubs. Okay, where you do R&D of the highest order, where you design products which are extremely technologically advanced, where you actually redesign business processes. I'll give you an example. Samsung, for example. Samsung has its global innovation center in Bangalore. And Samsung, as we all know, are globally known for their television sets, for their mobile phones, etc. They're a big competitor to Apple. In fact, my phone here, if you can see this, I don't know if it's clearly visible or not, but all these phones are designed in India, in Bangalore. And that particular innovation center, and somebody who's highly reliable gave me this feedback many years back. This innovation center is so essential, so centric to Samsung's global ambitions that people below a certain level, including very senior executives from Korea, are not permitted to enter that facility. Excuse me. So innovation hubs is the way forward. Then we have industry diversification for the GCCs. When they came to India, they were focused on IT and software. But then they spread into healthcare, pharma, finance, manufacturing, and this is not the end. It's going to spread even more. The GCCs in India are resilient and adaptable. They change with the economic environment. They change with technology. They're very agile. And last but not the least, I think one of the main reasons why the GCCs will continue to flourish is the role that the government has played. Now, Unlike other scenarios where government has been like a strict taskmaster, here, what they did, the government actually specified the boundaries, the benefits, the Lakshman Rekha, if you can put it, and allowed the players inside, gave them a free hand to operate as they want, as long as they didn't cross the boundaries. Of course, a few entities had to be taken to task occasionally. But by and large, all these entities were free to operate the way they wanted it, free to innovate the way they wanted it. And that still remains, you know. And that's what's going to actually ensure that the GCCs in India have a great future. Challenges, yes. In fact, if I look back, uh, I think the largest challenge we faced in AXA was in 2009. So let me take a step back. So AXA is a very large player in the global insurance and financial services space. Okay, so they are, whichever countries they operate, especially in the developed countries, economies of the world, they're either number one or number two. Now, we were an offshoring center of AXA based in India, and we were entitled or entrusted to work only for AXA companies globally. So we used to work for AXA companies in the US, in Europe, in Asia, Australia, Japan, and so on and so forth. Anyway, we were not allowed to do any third-party business outside AXA. Now, in 2009, we were somewhere around about 3,000 strong in India. And we were doing a lot of these high-end work, insurance-related work. Um, and one company we used to work for was this company called AXA Life in the UK. Now, they were a life insurance company in the UK, something like LIC is to India. Now, AXA Life had one set of operations, which in insurance parlance is known as closed book operations. Let me quickly describe what a closed book operations is. A closed book operation is basically insurance policies that a company has stopped selling. So, like, for example, LICs have sold policies in the 60s, 70s, 80s in India. Now, they don't sell those policies anymore, but you still have to run those policies because those policies have not matured. They are in different stages of maturation, you know. So you will have to still run the policy support system, the claim system, etc., etc. So the challenge here is that you do not have any new revenues coming in, but your cost increases year after year because you have to maintain the team. And you will have to ensure that the team actually remains to process these claims and these policies as and when they mature. So when an insurance company and a global insurance company offshores its work, one of the first areas they look at are these closed book operations, because in their own countries, they are not earning any additional revenues. Their costs are going up day by day. So it makes sense to send it to countries like India to get the work done at the back end. So we had about 900 people out of this 3,000 people. Almost one third of the company was engaged in closed book operations, which was very profitable operation for the Indian entity, AXA Business Services, where I was working. Now, AXA Life actually decided to sell off its entire closed book operations to a third-party vendor, Captiva, in the US, in the UK, in fact. This entity decided to buy the entire books from UK, okay? And we were therefore mandated to transfer one third of our operations to this new entity in UK, which was therefore setting up an corresponding entity in India through transfer of people from AXA Business Services to their Indian operations. Okay. Now, basically, business process outsourcing or offshoring operations, I used to describe it, or I still use this acronym to describe it as PPT type of operation. PPT stands for People, Process, and Technology. Okay. So whatever be the nature of operations you offshore to any country, whether to India or outside, these are the three critical components. And if unless you address these three critical components, your operation, your offshoring entity will never be a success. So we had to ensure two, three things. First of all, we had to ensure that these people that we are transferring never left the organization before the knowledge got embedded in this new UK entity which was purchasing. Second, we had to digitize the entire knowledge. And this is some 17, 18 years back I'm talking of. Digitize this entire knowledge so that it, it never became people dependent. So these were the two things that we were extremely successful in doing. We migrated that 900 strong team. We ensured that they were retained for at least a period of 2 years in their new organization. And parallelly, we shared with the vendor, the new vendor, the entire digitized module of the closed book operations. In fact, the operation was such a success, and AXA Life specifically was so overjoyed that they compensated us more than adequately for the loss that we had in terms of the FTEs at our end. So I would say that's probably the greatest challenge operationally that we faced in AXA Business Services in India. And it was people related, and that's how we managed it. But to summarize, if you focus on people, process, and technology, there is no challenge in the GCC space that you cannot overcome.
On people, process, and technology it is. With your vast experience in insurance industry, specifically in India, what do you think is the future of insurance companies in India? And what is preventing us from going global aggressively?
Questioned in the current business environment. I mean, my first response will be there has to be a global play. I mean, there's absolutely no reason why Indian insurance companies cannot venture out globally. Absolutely no reason. But today, we do not. And there are several reasons or factors behind that, which I'll sort of briefly capture in my response. But now, insurance business is extremely capital intensive and extremely technology intensive. And what the government really needs to do today is to ensure that they allow 100% FDI in the insurance sector as soon as possible, like they did in many years back in the banking and financial services space, or several years back in the telecom space. They really need to open up the insurance sector completely so that foreign players, global players come in with capital, with their insurance and technological expertise, and that will only give a fillip to the industry to grow and expand. The other role, very critical role that the government can play is in terms of lack of awareness. I think India is still a country where awareness about insurance is pathetic. It's actually very poor. And that leads to a lot of misconceptions and reluctance to purchase insurance. Government, through its various outreach programs to the masses, can really play a huge role in this respect. And even by extending its own insurance schemes, Ayushman Bharat is a classic example. It's a revolutionary product. Okay, especially for senior citizens and all that, which the other private and public players are going to follow or imitate. Government can really create awareness in the country about insurance. Now we come to regulators, IRDAI. Now, IRDAI has come a very long way. They have moved from being a strict taskmaster to being more of a regulator, but still they micromanage a lot of things. They need to manage less and guide more. Like the corresponding regulator, for example, in the GCC sector, what STPI did in those days. Okay, so what can the IRDI do better? First of all, simplify regulations. Regulations in India are very complex from an insurance perspective, complex not only from the company's perspective, but also from the consumer's perspective. That's one. Second is these regulations keep changing. Every change of regulation leads to change of policies, which is burdensome for both the insurance company and for the consumer. You know, so it creates a lot of uncertainty. And the third thing is that IRDA must actually align with global compliance standards. I'll give you a classic example, and this is, of course, from my days in insurance, which is 10, 15 years old now. In those days, of course, the regulation has now changed, but in those days, IRDA had put a cap on commission that you could pay to the agents and brokers. A cap. There was a limit. Roughly, let's say 10% was the max commission that you could pay to your commission agents and brokers. Now, what was the problem? The problem was you pay 10% to them, they will give you zero business, zero, absolutely zero business. Okay. They were working at 20, 30, 40% commission, depending on the nature and size of the business. Okay. So the insurance company had a Hobson's choice. They were between the devil and the deep sea. You try to adhere to IRDA's regulations, you'll be out of business. You actually then try to adhere to market mechanisms and you will be hauled up by the IRDA over coals for paying extra commission. So all of them were forced, their hands were tied to actually bypass the laws, which was sad. In fact, I remember, I cannot take this name publicly, but I remember seeing the balance sheet of an insurance company, and it's still there, and it's a fairly well-known private player in the insurance space in India. And their balance sheet would put any courier company balance sheet to shame, because they were channeling those extra commissions that they were paying over the IRDA sanctioned rates as some form of courier expenses in terms of sending mailers and promotional documents to their agents, brokers, and so on and so forth. Crazy, absolutely. Now, so this was the Indian standard. What was the global standard? You look at Singapore in those days. Okay, Singapore, what did it do? The same thing. Singapore said the insurance company had to take an approval from the end consumer. Okay, and if the consumer was fine with the commission that they were paying their agent, and the consumer gave his formal approval, written approval, the insurance company was free to pay them. So ultimately, it was the consumer who was paying for the cost. And if he is okay with paying 30% commission to the broker, who is IRD or who is the Singapore regulator to come and object? So these were certain global standards, which of course, this is dated, but I'm saying there will be similar global standards that the regulator in India has to actually adhere to or apply in Indian context. The next stakeholder we come to are the other players, the insurance companies in India. And of course, there are many. And the challenges are manifold. First is, of course, the penetration. The unfortunate part of most insurance companies, of course, there are a few exceptions now, but most insurance companies in India today are still very myopic, very short-term in their approach. They are not there. They still do not have a long-term view of this industry or for their brand or for their products and so on and so forth. Okay, they reach out only to the top tier metros or at the most tier 1, tier 2 cities where people know about insurance, and they sell standard commoditized products over there. Their job is actually to reach to the tier 4, tier 5, semi-rural, rural areas and really penetrate those markets. So effectively, to take an analogy, they are still nibbling at the same cake instead of increasing the size of the cake. The second thing is they obviously, and they need to do it. Of course, they have done it a little bit, but still they need to do a lot more in terms of diversifying distribution channels. So Even today, if you do a survey of the insurance companies in India, a lot of them are still focused on agents and brokers. In the last 15 years came bank assurance and so on and so forth. But what they really need to take leverage on is there has been a technological revolution that is sweeping across the financial services sector in India. Today, my bank is in my phone, in my smartphone. Why can't my insurance company be also in my smartphone? They really need to use innovative digital platforms to reach across India. Then the third thing they need to do is simplify products. I have briefly touched upon this when I was discussing the regulator. The products are very complex. And tell me, you hand to heart, um, how many of you go through an insurance policy? You do not read an insurance policy. And you do not know some clauses, some sub-clauses hidden somewhere, and you will only get to know at the time of claim when the insurance company will take refuge behind those clauses and sub-clauses and say, look, boss, I can't pay you. So that leads to the next point, which is the timely settlement of claims. And this is the biggest grudge that today a consumer of insurance in India has against most of these insurance companies. Delay in payment of claims, rejection of claims. This leads to dissatisfaction amongst policyholders. They damage the reputation of the insurance completely. So the next is that insurance companies today need to really develop underwriting and risk management skills. I think we have a shortage of such professionals in India, big time. And because we lack in underwriting skills, the insurance companies, which are custodian of massive volume of data, they really cannot analyze that data and therefore come up with new, innovative, customized products. Like micro insurance, for example, like cyber insurance, which are more relevant from the current economic perspective, which suits the needs of the customers. And finally, I would say the insurance companies in India, they need to actually collaborate with global players, learn the insurance expertise, the technological expertise from them, and set foot abroad. There is no reason why they cannot explore global markets from India. And finally, the last stakeholder, which is the service providers. And here, I would probably focus more on because from an example perspective, that would be very appropriate. I would focus on the medical service providers, okay? The hospitals. And the fundamental thing here that pinches all of us, the insurance companies, the end customers, is the inflation in the costs. Medical expenses have seen over the last decade a humongous increase. What used to cost a simple operation, a surgery used to cost 2-3 lakhs, 10 years back will probably cost 3 times that amount today. Okay? And this bites everyone. Inflation has to be absorbed to a very large extent by the service providers. The medical insurance packages need to be competitive and comprehensive. Okay, and medical insurance is just an example. So if all these key players keep customers as the central concept and improve and tailor make their services to meet the needs of the customer, there is absolutely no reason why we cannot go global and be a dominant player in the insurance market globally, given the fact that very soon we'll be in the top 3 economies of the world.
A lot of points that will help insurance companies in India going global aggressively. What role do you think an independent director can bring onto the boardrooms, specifically in India?
The first thing is governance and compliance. Okay. Um, the independent directors have to provide oversight of the management and ensure that they act in the best interests of the company and its shareholders. And this is especially relevant if you are an independent director in a family-run business, because consciously or unconsciously, the bias is towards family associates or associate business entities. Okay. The next thing I would like to say is they must ensure or they must put systems in place to ensure that all legal and regulatory requirements are complied to a T. Okay. Um, I'll give you an example of AXA. We were a private limited company. There were no independent directors. There were non-executive directors over there. And of course, I was on the other side of the fence. I was a finance director and then a CEO and a managing director at some stage. But what we used to do in every board meeting, quarterly board meeting, was we used to submit a quarterly compliance statement signed by the CEO and the CFO to every member of the board, applicable for all rules and regulations to the entity. Okay, so the independent director actually needs to put in place a system that will ensure this compliance. Okay, and the advantage of this was that even if there was some slip-ups, something like TDS payment getting delayed, the directors are responsible for this. Okay, so this gets detected early and this gets addressed early. Maybe there could be some control deficiency, you know. So this is something which an independent director really needs to focus upon. The next is strategic guidance. An independent director needs to provide inputs to the company's strategic plans based on his experience and expertise. Okay, he may not be the best person from that particular industry background, but he can provide invaluable inputs from a more generic perspective that will ensure that the companies have well-rounded and tried and tested strategic plans. An independent director plays a very key role in the implementation of ERP, enterprise risk management functions in a company. Now, over my 30 plus years of being in service, one distinction that I've seen between Indian and foreign companies, at least in those days, was in risk management focus. Indian companies, for whatever reasons, maybe lack of awareness, lack of knowledge, or priorities being set elsewhere, they give lesser importance to risk management as opposed to the foreign companies. And the foreign companies spent an inordinate amount of time in identifying risks, managing risks, mitigating risks. And that created a difference in the long run between these two entities. The other thing that the Indian independent director could do in terms of this strategic guidance is ensuring that the internal audit and control function is independent and reports directly to the board. This is very, very critical. A compromised audit function is a disaster, unmitigated disaster for the company, and would definitely lead to frauds and malpractices in future. The only way to stop this is to ensure that the function is completely independent and the chief audit officer reports directly to the board or to the audit committee. And probably one of the most important functions of the independent director should be to protect the interests of the minority shareholders. In fact, they're supposed to protect the interest of everyone, but especially the minorities shareholders and more so from a family business run perspective, where they are truly a minority. Okay. Related party transactions, extremely relevant from an Indian context, especially from these, family-run businesses. Independent directors really are in a critical position here to ensure that these RPTs are fair and transparent. And wherever there is a conflict of interest, the decisions are made in the company's best interests. Next, I would say they have a very important role to play in performance evaluation. And especially, let's say, evaluating the performance of the board as well as of the senior management. Directors need to provide their critical inputs for the KPIs, setting KPIs of the management. and then monitoring the performance of those KPIs for the management. They play a critical role, or they need to play a critical role in stakeholder engagement. They need to facilitate continuous communication between the management and the various stakeholders. The independent directors actually need to guide the company's CSR strategy and ensure that they align with the company's values and also contribute to the society. Ethics and integrity. And I think this is probably the reason why directors, and more specifically independent directors, are there. They need to advocate ethical business practices and implement the highest standards of integrity in the organization. They need to ensure protection of whistleblowers. The independent director needs to develop time in terms of learning and development, self-learning and development. They need to keep themselves abreast of what's happening around them in the industry where they are involved. They need to spend time on their own training and development.
That's quite insightful, Mr. Shashwat. Finally, one last question from Boardshire perspective. How has been your journey through the process of finishing your certification?
I enrolled in at a very wrong time. I enrolled for this course in 2022. And during the period of Corona, we were completely waylaid. Ours was a consulting startup, a bootstrapped operation, and we were completely shut down. And when I actually enrolled for this course, coincidentally, the market started opening up, and we started getting queries and projects and things. So I enrolled, but I really couldn't devote a lot of time in the initial stages to this particular course. So I took a long time. But then when I got into this course full-fledged, what I really liked, there is a difference between getting certified and true learning. And the way you guys did it was that you never allowed access to the next module till one went through the previous module and appeared for a small test in terms of answering certain questions, etc., etc. That really helped in true education as opposed to a simple certification. So the certification process, when I reached that stage, was pretty easy for me because I had gone through each module in depth and I was very well equipped. Okay. So it was excellent. The preparation was great. So I am conscious of the fact that you organized some changes when I was actually undergoing this module, but you never allowed those changes to adversely impact people who had enrolled for the course. And your interactions that you organized with industry experts were really something that added immense value to our preparation. So overall, it was money well spent and knowledge well learned.
Shashwat Banerjee for you bringing his diverse global experience onto the table. Thank you all for watching.